Hello everyone, and welcome to today's Crypto Headlines. I'm your host, and I'm here to bring you the latest, most valuable, and fascinating insights from the cryptocurrency market. Today, we'll delve into the potential threat of quantum computing to blockchain security, the latest investment moves by major institutions, and the evolving global regulatory landscape. Each piece of news is crucial for your investment decisions. Let's together gain insights into the market and seize future opportunities. First, let's focus on the latest news from the macroeconomic front. The U.S. Bureau of Labor Statistics' latest July jobs report was weaker than expected, seemingly providing a reason for the Federal Reserve to restart interest rate cuts at its September meeting. However, this positive news failed to boost the crypto market, instead triggering a new wave of sell-offs. Bitcoin fell to its session lows on Friday afternoon, while major cryptocurrencies including Ethereum, Solana, and Dogecoin saw even larger drops. This market movement indicates that despite a potential Fed rate cut, investors' risk appetite for crypto continues to decline. Furthermore, the U.S. President's public criticism of the Fed chair and the Bureau of Labor Statistics commissioner on social media, along with calls for rate cuts, added more uncertainty to the already volatile market. Over the past day, more than $1 billion in long and short positions were liquidated across the crypto derivatives market. Next, let's look at the latest moves from institutional investor MicroStrategy. The publicly listed company, known for its large Bitcoin holdings, recently announced it is expanding its SDRC security offering for the second time, aiming to raise more capital to purchase more Bitcoin. This move has reignited a heated debate about its business model. On one hand, its aggressive Bitcoin accumulation strategy is seen by some as a rational hedge against inflation and fiat debasement. On the other hand, critics argue that this business model, which relies on debt and equity financing to acquire a single asset, is extremely risky and could be a bubble waiting to burst. Notably, the company is also facing multiple class action lawsuits from investors. The plaintiffs allege that the company misrepresented the profitability of Bitcoin and understated its volatility risks. The lawsuits also question the company's use of alternative financial metrics to mask potential financial losses. Let's turn our attention to the altcoin market. Cardano, ADA, is currently caught in a tug-of-war between three forces: whales, retail investors, and derivatives traders. On-chain data shows that the largest wallets, or whales, are trimming their ADA holdings, with their share of the total supply dropping from 5.43% in late June to 5.02%. Meanwhile, the number of active addresses on the network has also declined by over 40%. In contrast to the whales' bearish sentiment, retail investors remain bullish, consistently withdrawing ADA from exchanges, which is typically a bullish signal. At the same time, the derivatives market has seen a significant increase in short positions, which are nearly double the number of long positions. Analysts suggest that the market's direction will depend on which side prevails, whether continued whale selling and short positions drive the price lower, or whether retail optimism triggers a short squeeze. For now, ADA's price is hovering near critical support levels, and the battle between these forces continues. Now, let's look at cryptocurrency regulation in Hong Kong. The Hong Kong Monetary Authority's HKMA stablecoin licensing regime officially came into effect on August 1st. The implementation of the new rules led to an immediate market reaction, with the share prices of Hong Kong companies with exposure to stablecoins dropping by double digits. However, several industry experts view this not as a negative sign, but as a healthy correction. They explain that the new regulatory framework imposes strict requirements on stablecoin issuers, including 100% reserve backing and minimum capital requirements, which is designed to filter out speculative players. Experts predict that during this 6-month transition period, well-funded players will be able to comply with the new rules, while many smaller companies or speculators may exit the market or move to other jurisdictions. Ultimately, these measures are expected to solidify Hong Kong's reputation as a globally trusted digital asset hub. Let's check in on crypto exchange giant Kraken. Having recently put multiple U.S. regulatory investigations behind it, Kraken is now actively preparing for an initial public offering, IPO, and seeking to raise up to $15 billion in funding. This news has caused its valuation on private equity trading platforms to rise significantly. Simultaneously, Kraken is launching its Layer 2 network, Inc., marking its first step into an on-chain strategy. Inc. is built on Ethereum's OP stack and aims to become the hub of Kraken's DeFi ecosystem. Its native token, $INK, will be airdropped to eligible active Kraken users. This series of moves, which also includes the acquisition of a retail futures trading platform and the launch of a payment application, is widely seen as a significant prelude to Kraken's IPO plan. Next, let's examine another facet of U.S. regulatory policy. The crypto lobbying group, the DeFi Education Fund, DEF, recently sent a letter to the U.S. Senate Banking Committee, urging it to protect decentralized finance, DeFi, innovation in its crypto market structure bill. The DEF argued that the legislation should be more tech-neutral and that crypto developers should not be regulated as financial intermediaries. They emphasized that the right to self-custody is essential for all Americans. Additionally, DEF warned that without a unified federal framework, traditional financial institutions might exploit regulatory fragmentation by funding state-level enforcement actions against DeFi developers to stifle competition. In a separate submission, prominent venture capital firm A16Z also raised concerns, warning that the draft bill's definition of ancillary assets could create dangerous loopholes that allow insiders to dump tokens on the public without regulatory oversight, harming investors. Let's continue to track the convergence of traditional finance and crypto. The online trading platform eToro has announced plans to tokenize the 100 most popular U.S. stocks on the Ethereum blockchain. This news highlights the accelerating trend of tokenization, which is now moving from crypto-native assets to traditional financial markets. This move aims to bring the liquidity and accessibility of traditional financial assets to the world of decentralized finance, DeFi, offering investors new trading and investment opportunities. As more traditional financial institutions and tech companies join this movement, asset tokenization is becoming a key direction for the crypto market. Next, we'll cover the latest from the public blockchain space. According to reports from analytics firms Messari, Nansen, and CryptoRank, the Tron network achieved impressive results in the first half of 2025. The reports note that Tron has a dominant position in the stablecoin ecosystem, with the supply of USDT on its network surging by 41%. Furthermore, Tron ranked in the top 3 for daily active addresses among all blockchains and generated nearly $1 billion in revenue in H1, surpassing both Ethereum and Solana. Of particular note is that a company named Canary Capital has filed a proposal with U.S. regulators for a Tron ETF that would include native staking rewards, a first-of-its-kind structure in traditional finance. This data suggests that Tron is not only seeing significant growth in users and revenue, but is also beginning to attract interest from traditional financial institutions. Finally, let's talk about an interesting development. The crypto industry is becoming a new source of U.S. political donations, with significant funds flowing into Donald Trump's super PAC. Concurrently, Trump's media company, DJT, has also made a massive purchase of Bitcoin, elevating it to the upper echelon of corporate BTC holders. This raises a new question. Is Bitcoin investment becoming tied to political affiliation? Some commentators argue that this is turning Bitcoin from a neutral financial asset into a tribal cultural symbol. For example, Trump's investment is seen as a populist vehicle, while other firms might launch Bitcoin products with eco-friendly or libertarian labels. This presents a new risk for investors. Are we buying the coin or the campaign? That's all for today's crypto headlines. From macroeconomic shifts to the latest regulatory developments, from the baptism of Hong Kong's stablecoins to the new landscape of U.S. political donations, the crypto world is undergoing profound changes at an unprecedented pace. Please continue to monitor market changes, invest prudently, and I wish you all the best with your investments. We'll see you next time.